Hello and welcome to the week ahead video with me, David Madden. Now before I take a look at the major events of next week, let's just take a quick recap of the major events of the week just gone. Financial markets saw a surge in volatility in the latter half of this week, as on Thursday it was announced that Russia invaded Ukraine. The conflict in Eastern Europe sent shockwaves throughout the financial markets, and as we can see here, we saw a sharp downward move in the US500. Broadly speaking, we saw declines in global stock markets. Assets that were considered to be, say, lower risk, such as gold, saw sharp rallies, and we also saw impressive gains made on the oil market and the energy market, as traders feared the conflict in Eastern Europe could spark an energy shortage crisis. As a response to the Russian aggression, various Western governments, including the US, announced sanctions against the Russian government, and that helped stock markets rebound a little. Even though the US500 has rebounded from its recent lows, it's still trading below these three simple moving averages, and while it continues to hold below these three simple moving averages, it's likely the more medium-term downward trend will continue. A move lower from here could see it retest the recent lows of 41.06. Looking at the price action in the past 12 to 18 hours, we can see the US500 has rebounded somewhat. Looking at the MACD indicator, we can see there's a clear increase in positive momentum, so that suggests the bulls are in control. If you do see a continuation of this upward trend, it's possible resistance might be encountered from this simple moving average here, which comes into play at 43.31, and a break above that could target this zone here at 43.96. Now, why is this important? Now, looking ahead to next week, we have various different updates in terms of economic announcements. On Friday, we have the all-important US non-farm payrolls report. Keep in mind, at the most recent non-farm payrolls report, it was quite well received. In the recent months, the US labour market has been improving, and at the last Federal Reserve meeting, the US Central Bank failed to rule out the possibility of hiking interest rates at all 7 meetings this year. The Fed funds futures market, in the wake of the update from the Fed last month, began to price in 5 interest rate hikes from the Federal Reserve this year. Some analysts were calling for 3 hikes this year. Some analysts were calling for as many as 7 interest rate hikes this year. The conflict between Russia and Ukraine could impact what the Fed does, but in addition to that, depending on how well the non-farm payrolls reports come in this week, that could also influence what the Federal Reserve are going to do in relation to hiking interest rates. On Wednesday in the week ahead, on Wednesday and Thursday, we'll hear from Jerome Powell, the head of the Federal Reserve. He'll be testifying before US policymakers, US lawmakers. On Wednesday, we will also hear from OPEC Plus in relation to what their plans are regarding output. And on Tuesday, we'll have an interest rate decision from the Reserve Bank of Australia. As I mentioned earlier in this video, the decline we saw in stock markets yesterday was kind of mirrored by an upward move in the gold market, as traders were quick to seek out assets that are considered to be safe havens. So if we take a look at the gold market, we can see here it rallied yesterday, hit its highest level in over 1 year. Even though it's pulled back a little, it's still holding above these 2 simple moving averages. And while it continues to hold above these 2 moving averages, it's likely the more medium-term upward trend will continue. A move higher from here could see it retest this could see it retest 1974, and a break beyond that could see it target 2000. If you do see a continuation of this short-term downward trend in gold, it might look to retest this area here at 1878, and a break below that could target this zone here at 1851. In relation to the energy market, we also saw a sharp upward move in oil, as Russia is a major exporter of both oil and gas, and in turn we saw a sizable move to the upside in US oil. In fact, US oil reached a new 7-year high yesterday. After the announcement of sanctions against the Russian government, sentiment and the mood in the markets lightened somewhat, and in turn we've seen US oil drift a bit lower. Even though it has drifted lower, it's still holding above these 2 simple moving averages, and while it continues to hold above these 2 simple moving averages, it's likely the more medium term upward trend will continue. Another rally in oil from here could see a target retest this area at 99.98, and a break beyond that could see a target 102.00. If you do see further losses in US oil from here, support might be found from this simple moving average here, which comes into play at 90.40, and a break below that could see a target this region here at 87.26. That's all from me from this week. Thank you very much.
Thank you.